Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. The residential property market has been a hard one to predict. After soaring during the pandemic, we've seen a correction over the last 12 months or so, or a little less, as interest rates rise. But the dip seems to have bottomed out, with capital cities climbing again. Instead of focusing too much on where we've come from, I wanted to get an idea of where we're going. In particular, the impact of population growth with migration booming. What's this mean for property prices, for investors, and for the types of properties we're living in? CBRE is the global leader in commercial real estate services and investment, and also a supporter of this podcast. Samir Chopra is the Head of Research at CBRE. Samir, welcome to Fear and Greed.
Thanks, Sean. Hope you're well.
Let's start with the big one up front. What's going to happen to property prices, particularly house prices?
Yeah, look, Sean, what I'd say is, we've got this very big supply-demand mismatch in Australia, and it's also a global issue. And you've got interest rates rising on the other side. But the fundamentals right now, just absolutely trump what's going on in interest rates. Just a chronic shortage that's happening. We're also seeing, rents accelerate. And in my opinion, rents will remain elevated and will keep growing over the next few months, quarters, and years. And in fact, high interest rates are actually pushing downward pressure on supply. There's going to be less supply coming to the market than what many have expected. So, I'm pretty optimistic. But I think what I'd say is certain suburbs and certain precincts will absolutely outperform, and others will be more modest in their growth. And so it's important for people to really dive down and get really, really granular on, where's the best opportunities.
Okay, well, we'll jump into that. But just before that, you said something there fairly clearly. Supply and demand will trump interest rates. Well, supply and demand are trumping interest rates right now.
Yeah, look, so supply and demand are trumping interest rates, and it's kind of been our view for the last 6 months that this is going to eventuate because, yes, cost of borrowing has increased, but at the same time, most buyers come into property with existing equity on hand, kind of thing. So they're not facing the full brunt of interest rate increases. And at some point, when vacancy in markets drops below 1.5%, values and rents start to increase at an accelerated pace. So if there was a lot of vacancy in the market, if there was like 5-6% vacancy, then yes, interest rates would trump. But when you drop below 1.5%, the fundamentals really start to kick in. And then if vacancy drops below 0.5%, then absolutely fundamentals become red hot. And that's kind of where we're headed. I think that's kind of where we're headed. Vacancy is going to continue to plummet from current levels.
So just before we get into the more granular information, is this a migration story? Is that why that's going to happen?
Yeah, look, Australia is slated to have 975,000 people coming to our shores in the 3-year period to 2024. And Australia's population growth, will be about 14% in this decade. That is the highest population growth of any country, any major economy in the world. And the way to sort of visualize this, for the audience that's Sydney-based, I'd say we need to create a whole new eastern suburbs by the end of this decade. You need to create a whole new eastern suburbs by the end of this decade. That's kind of the volume of population growth that is going to happen in Australia. And the more people you add into the mix, the more stock you need. In Australia alone, we need 408,000 homes by 2025, and we do not have 408,000 homes being prepared by 2025. So population growth is absolutely super important, and immigration is kind of fueling it.
Okay, so let's break it down a bit. Units versus houses. What's the outlook for the two sides? And then after that, we might go metro versus regional.
Yeah, look, I'd start off by saying, when the population growth is largely driven by migrants, most of the demand tends to be for units because people come in, they land in our major metros. By the way, Sydney gets about 35% of inbound migration. Melbourne gets about 30%. So these two cities will feel it. and they'll feel it in the apartment market, because when migrants first come in, they want to sort of move into an apartment. They normally stay in the same place for about 3 years before they figure out what they want to do in the next phase of their life. Most of them tend to rent as well, by the way. So apartment rentals, particularly in the inner areas, will do really, really well. Not just migration, but you've also got more students who are now going to be living in Australia, not just studying online. And then you've got this whole Airbnb market as well. Collectively, they are all going to put pressure on the apartment market, and it's all going to be in the inner areas of the major metros, with Sydney and Melbourne, feeling the brunt of it, and then Perth and Brisbane as well.
Stay with me, Samir. We'll be back in a minute. I'm speaking to Samir Chopra, Head of Research at CBRE. Does it flow out to the sort of the middle circle of those cities? Do the regions get much of an impact? I mean, I suppose some of the major regional centres with universities and that may get a boost.
Yeah, Sean, they absolutely will, because people will, there'll be some Australian citizens that'll migrate out, sort of thing. So we get this, net migration from the southern states up to Queensland, for example. So, population does spread out over time. But what we find is when there's a shock to the system, and the shock is being felt in inner city areas, that those areas, the rent growth is at 2 times the level of the rent growth in the outer area. So everyone benefits. All boats, rising tide will float all the boats, but some of them are going to be on a tidal wave, and we find it's almost 2 times faster rent growth in the inner city areas. And you can kind of see that, right? Like in the CBDs right now, rent growth in the last 12 months has been about 20%. And if you get away from the inner city area, rent growth has been more modest, right? Like 6 to 10% sort of range. And we think that'll persist because we're still in that shock phase. So we think this will persist for the next 24 months as a minimum, where things continue to get tighter.
Do we need to rethink the way we do housing in our cities? What you're talking about, 2 years, I suppose, is a short time frame in the construction sector. But still, if we're going to get this migration flows and people are looking for apartments and that, do we need more high density living?
We do need more high density living. I also think there's a strong case for bigger apartments, because more people are going to need to contribute towards the rent. So, the rent for an apartment, couples will need to sort of contribute to it, and maybe 2 couples who are sharing an apartment need to contribute to make the rent more affordable and palatable. But just to kind of give you a sense around, where's this growth? Remember, I was saying, Australia population growth 14%. Sydney CBD and Parramatta and the Hills District, we think will grow at 2 times the rate of Sutherland Shire and eastern suburbs. Melbourne City and Southwest Melbourne. Southwest Melbourne's really interesting. We think Southwest Melbourne will grow at 2 times the pace of eastern suburbs in Melbourne. And in Brisbane, it's pretty spread out. But again, in Brisbane, CBD and inner Brisbane and even southeast Brisbane will grow at double the rate of West Brisbane. So this is what I mean is you need more apartments in the right places. And the right places is typically near the CBD. And then there's some pockets. Like in Brisbane, you can go southeast. In Melbourne, we would say go southwest as well, because you've got good sort of opportunities in that sort of market. Canberra is very clustered around the city. Inner North Shore and inner South Canberra. That's kind of where the growth is in the ACT.
Is there much of a role for government in all this? Obviously, we have a debate going on at the moment between the government, where the Greens are heavily involved in terms of funding public housing, but this is kind of much more than public housing. What sort of role should the government play?
I think the government's role in this, to help fast track some of these projects where they make sense, particularly close to transport networks, because the government wants to sweat the infrastructure as well. And that's sensible. So, we should fast track projects where necessary that are close to infrastructure and transport hubs. The other place where government can play a role is, financing is becoming really challenging right now with the recent rate hikes that we've had. Is, how do we ensure that financing is available for projects? And then the third part of this is construction materials are super expensive right now. The cost of construction has gone up by 25 to 30%. Labor is inflating at almost 20%, not quite, but close to 20% right now in some areas of construction. So, I think the role that government can play is, how can we help lubricate this part of the supply chain to make sure that there's still affordable housing, or you don't need to get massive, massive rent growth to try and justify projects. I think that's the role of government.
I dare say, Samir, we're going to be talking about housing for the next couple of years, really, no matter what.
Yeah, look, and there'll be different ways of playing this. Affordability is one of these issues, Sean. And if you look at 22, so last year, there was only two pockets of Australia where a two-bedroom apartment was 750 a week, and that was Sydney CBD and the lower North Shore of Sydney. And if you scroll out to 2026, I have Sydney CBD, we have eastern suburbs, inner west, lower North Shore, the northern beaches, St. George, upper North Shore, all with median rents that are above 750. And then Melbourne CBD, Brisbane CBD, inner Brisbane. There'll be a large pocket of Australia where, the average two-bedroom unit is going to be over 750 a week. This is not an Aussie issue, by the way. This is a global issue. We face similar things, and we see the same things in Berlin. We see it in London. We see it in Singapore. We see it in Toronto. People want to live in these wonderful cities, and we've had this inward migration into these cities everywhere in the world, and there hasn't been enough stock built in the last 20 years. So it is definitely an issue in Australia, but it's also an issue in many, many, many markets around the world. We're seeing 20% type rent growth in many markets outside of Australia.
Samir, thank you for talking to Fear and Greed.
Thanks, Sean. Take care.
That was Samir Chopra, Head of Research at CBRE. This is the Fear and Greed Daily Interview. Remember, you should get professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.